Welcome back to Palisade Radio. I'm your host, Tom Bodrovics, and joining me today is a returning guest, Dudley Baker from CommonStockWarrants.com. How are you today, Dudley?
I'm doing great, Tom. Good to be back with you.
Absolutely. So I thought most of our listeners should be familiar with common stock warrants as they are. And I thought we could start by explaining the difference between purchasing, or let's say getting, warrants as part of a private placement versus getting warrants as a non-accredited investor.
Okay, well, if in a private placement, I would say virtually all, especially all the companies in the resource sector, they probably all have all issued stock warrants in connection with private placements. In my services, I basically covered just those warrants that are actually publicly traded. And but yet I've participated in private placements myself, so I'm familiar with the whole process. And yeah, it's really the management decision of each company and their financial advisors as to whether they want their stock warrants to trade or not. Obviously, if anybody, a company that you liked, if you had the opportunity to participate in a private placement, I mean, I'd be right there with you. It's like if you've got money and you meet all the qualifications, definitely do the private placement. But for some people, you don't have the ability to get in on the private placement, so you find out after the fact there was a private placement, and then some of those warrants actually trade. And so those are all that's in our database. So to me, I like both. I've done both sides of the equation here. And it's just not a matter of preference. It's just, not all companies' warrants are traded, and so it's you need the database. And so in our database, we cover everything that is traded, U.S. and Canada. So yeah, just to mention, I know our audience here is really focused on the resource sector, precious metals arena, et cetera, but there's a lot of other warrants that trade in the United States that are on biotechs, pharmaceutical companies, and all kind of different industries. So just to let our listeners know that, they trade on the New York Stock Exchange, NASDAQ, and it's nice to have the liquidity on the warrants that are traded. And I know, especially if you can find a warrant that's got a 4 or 5 year life and it's liquid and trades on the Toronto Venture or whatever, that's a pretty good situation, especially in today's market.
Absolutely. And being a guy that's so involved in the warrant space and the junior sector, how do you feel that let's say the junior sector sentiment is right now? I know the other day, Marin Katusa tweeted out that there's been 133 mines shut down globally right now because of the coronavirus, and over half of them are precious metals mines. And how do you see that translating right now in the junior miners sector?
Well, I own a couple that have basically been hammered big time that are producers. And so I fully understand, sympathize, and somewhat in fear that, we do have the mine closures, and you hope it doesn't get any worse. One example I'm going to throw out, one company that I really like, it'll be a good example here, is Grand Columbia Gold. They're down in Colombia, producing over 200,000 ounces a year, cash in the bank, really, I want to say small market capitalization with shares outstanding, and they have a warrant trading with over 4 years remaining life, and basically it's taken a 50% haircut. And the deal is, and where we still have gold now, still sitting up here around the 1600, and you think, what the hell's going on? And that's the only thing that I can really say is that there has to be a fear out in the marketplace right now that what happens, say, if the government of Colombia makes a decision that we've got to, halt production for a bit due to the virus, that cannot be a good thing for the share price or for the warrant. We all have to hope like hell that this virus situation somehow is going to get dealt with, sooner rather than later, because this could really be disastrous. I mentioned hypothetically to some friends, I live down here in Mexico and a lot of other gringos and expats down here. And I've said, so what would happen theoretically? Say gold decides to all of a sudden, this week go to the moon and we shoot up to 2,000, 2,500, but yet the mines get shut in. And what's going to happen to the share price of the mines? To me, that would be like the almost worst possible catch-22 that I could imagine. Substantially higher metal prices and the mines are not producing. It's a crazy world in which we're living right now. So I'm trying to think outside the box myself as what could possibly go wrong with our bullish attitude, on the miners. I think all of us have to believe in the sector, Marin and Rule and all the guys, is that with all of the money printing that's going on, this ultimately has to work to the benefit to gold and the miners. What kind of turmoil are we going to go through before that end game kicks in for us, to me, is the great unknown. And will that just be a month or 3 months or 6 months, and then we get this party back on the show on the road again? There's so many unknowns, but yeah, that is a cause for concern with the mines getting shut in, and what does that mean for all of these miners? That's a big concern. Absolutely
a large concern. Obviously, it's almost impossible to predict a black swan event like this, but how do you factor in market timing, political and economic events when looking at some of these warrants?
Well, I'd say normally I don't. Like back in if we'd have been having this conversation back in January or first week of February, it would have probably been a totally different conversation, because then most of the shares were doing really well. We were in a nice uptrend. Gold was doing well. It looked like, man, we were on the verge of really gold, spitting to new highs, and the miners taking off, and let the good times roll. And then it's like, holy crap, what happened here? And so preparing for a black swan event like this, I don't know how anybody does it. I always tell my subscribers is that if somebody said they sold before this happened, I'd have to kind of question whether that was the truth. This came out of the blue so fast and affected, I want to say, every investor. I don't know how you really had time to make sound decisions if you wanted to sell. And I've always thought if you start selling the miners, that one thing to sell is another. When the heck do you get back in? So maybe sometimes I've stayed at the party longer. I feel like we are in the right sector. Ultimately, we're going to be the winners here. It's just whether it's a matter of months or another year or so before we really get the reward that we're looking for with substantially higher prices. That's the big unknown. But I think right now I would say patience is what we need as a resource investor. And I don't know. I'd just say if you haven't sold, if you didn't sell, it's in my mind it's too late to sell. So it's like now is the time to be looking for opportunities. As some of these share prices have been beaten down, it is the time. And I think that's always the deal. As Rick Rule would say, everything's on sale right now. So no, it seems nobody wants to buy when things are on sale in the resource sector. So they want to buy them when they're hitting new highs, but they don't want to buy them when they go on sale. So I'm always looking for new opportunities myself, and that's what I kind of preach to my subscribers as well. If you do have any cash available, this should be a great time to be looking or putting some money to work.
Absolutely, and hopefully your subscribers and some of us can take advantage of that at this point. So as you're saying, you've maybe stayed at the party too long sometimes. What goes into your thinking on when to sell? Do you have some strategies that go into making those decisions?
In a way, I'm going to say no, which sounds crazy. In a perfect world, if a stock would really have great news and all of a sudden go parabolic, that's the easiest thing in the world for me. Because once it goes parabolic, I've got my hand on the trigger. It's just a matter, am I going to sell today, tomorrow, whatever? This brings to mind the story on Northern Dynasty just a few years ago. They had just come out with a warrant in the summer, like in June, 5-year life, unbelievable. And I was able to pick it up darn near at the bottom at like 16 cents, 16 and a half cents. And then I guess that's when Trump was running for office. He was talking about relaxing the regulations with the EPA and all that stuff, if you remember, on the Pebble project up there in Alaska, and the shares took off. And that warrant went from 16 and a half cents to over $3.50. And it all happened by January. So all of this took place within a total of 7 or 8 months. It was an incredible ride. Well, I knew when I saw it parabolic, this is it. It's just a matter of when I sell. So basically, I unloaded on that parabolic move up in the $3 range. So that makes it an easy decision for me. In a normal market environment, I'm like most of the guys that we're all looking for the 500, for the 5 times, 10 baggers, 20 baggers. So, these don't come about all the time. And when you get them, you got to feel blessed that you get them. Now, if the common shares, go up 10 times, well, the warrant's going to probably go up 20 times, because normally we're looking to get double the leverage out of the stock warrant as the common shares. So sometimes you just naturally or unfortunately hang on a little longer looking for these big moves. Now, I think right now in today's market, we sense that gold should do incredibly well. Gold should go to new highs. And then we need, for us resource investors and the miners, we need for the market psychology to really kick in to these miners. And kind of the world decides this is where they need to be, is investing in these miners. And this is it's like an intangible. I don't know how you define when that happens. But I know this has happened many times that in my career, is that it's almost like a switch gets flipped and everybody decides they need to own the mining stocks. And then we just get rip-roaring bull markets. And that's when you get the 500 to 1,000% or more gainers. And to me, that's when it's easier to sell, difficult, but you can layer yourself out. At least there you can start selling off part of your position. So, right now I've got a nice personal portfolio. I'm not excited about, the last 4 to 6 weeks of market action and the haircut that I've taken, but I'm confident of where we're at and what's coming down the road for the gold and the mining sector. So that's I think all of us have to dig deep and do we really believe in this sector or not? If you're new to the game, you may get pretty darn queasy, because this is the drawdowns are incredible sometimes before you hit the big home runs, and it really will get you scratching your head. There's just so many, in my mind, great opportunities here. They're only going to be great opportunities at the end of the day when we sell them, right? They look to be great opportunities from the price standpoint today, but we're only going to know after we've sold them for 5, 10, 20 times higher over the next year or two. I don't know. It almost seems like with what's happening right now, Tom, is that maybe this is going to make this whole sector hotter faster than we would have expected. Once we get past this virus, with all the money being printed and all the havoc that this has to create on the world's economy, I just have to believe that we are going to be in the sweet spot of investments coming up. We may still have some turmoil to go in our sector, but I think that this is going to be the place to be, and I think we have to have the patience. We look for opportunities, buy something that you really like. I always say, especially when you're talking about stock warrants, it'd be the same. I'd make the same comments if we were talking about stock options or leaps or whatever. You got to look, how much time have you got on a stock warrant? Number one, it needs to be a warrant on a company that you like. But it's like you need to make sure that, I always say, in a perfect world, you've got 2 years or more. I've got a couple of mine that are down now to about a year and a half. I really like the companies, and I'm going to stick with them because I think the year and a half is still going to give us time for things to work out. But given a choice, I'd prefer to have 2 years or more of remaining life, and then you can, not worry about it every day, beat yourself up. We all need to get a good night's sleep every night, so you don't want to worry about your investments. So, I feel comfortable myself with what I own. And just to mention that in my service with common stock warrants is basically a database of all the stock warrants that are trading U.S. and Canada, but also in what I call my gold subscription and for lifetime and subscribers, they get to see my personal portfolio. So they'll see everything that I own, and I do a weekly audio. And so we get a little more insight as to what I'm actually doing. But no, I think we're all going to be excited, let's say, when this next opportunity appears for us to start selling. I think it's a little ways down the road, but with what we're going through. But I think the day's going to come that it's going to be fun. I think we'll intuitively know the excitement when we see it.
Right. It seems like we've got a lot more chips stacking up in favor of the fundamentals of gold to really push it higher, stacking up recently.
Yeah.
Speaking of the leverage, when it comes to warrants, how do you calculate the leverage for your subscribers on the warrants that you're looking at?
The way I look at it, I learned from take you back a long way because it kind of shows my age here. Sidney Freed, he was like the grandfather and the mentor, so to speak. So back in the late 40s, early 50s, Sidney Freed was the only guy, writing books about stock warrants, etc. And he always looked at it as you're looking to get twice the bang for your buck by buying the warrants. And he always said, use the what if. What if, your stock goes from, say, $10 to $20? What's the underlying warrant going to do? So it's just a simple mathematical calculation. And you're always looking for that end result to be roughly 2 to 1 or better. And so I have a monster spreadsheet behind our database that I actually, it's like playing the what if. What if the common stock goes up 50%, 100%, 200%, 400%? What is the stock warrant going to do? And so, but I'm always looking for that gauge of 100%. If the stock doubles, I'm looking for basically 2 times. I can drop it down to maybe 1.7 and above as like the minimum to say that warrant would be what I would say undervalued. So that's basically in my website. I kind of give a fair value, undervalued, or overvalued calculation, kind of based on the parameters that I just discussed there. You can always do a quick Black-Scholes valuation. That's a theoretical number, and you may do a Black-Scholes and it'll say, the warrant should be, let's just say, worth $1, but you realize the warrant's trading at $1.25, and you think, well, I'm going to wait for it to get to $1. A lot of times it never gets to $1. And so you kind of got to fudge it a little bit if you're an investor. You may not get that true Black-Scholes valuation. So that's why I've kind of, I will say, admittedly, it's still very subjective what would you say is the valuation on any given date? And so I have to make that judgment call when I do it, whether it's fair value, which is still okay in many cases, versus the undervalued. The overvalued gets pretty easy. If something's getting close to expiring and the warrant's almost selling for nothing and it's way out of the money, a lot of those are really easy decisions in the databases. It's those that I put a fair value and undervalued rating on that I try to give more consideration to.
Could you give us a real quick overview of the Black-Scholes calculation?
Well, it's just basically giving you a time. It's a time formula. And so if it's just basically the current, believe me, I'm not the mathematician. I just go to it's almost like blackscholes.com. They've got a little simple form you can fill in there. And it's just asking for the current stock price, the number of months remaining on the warrant, or number of years, and then it'll just you just hit the calculate button, and it's a real simple little formula, but it's all done behind the scenes there, and it'll just spit out what the Black-Scholes valuation is, and it's really a cool place to go. That is a freebie, and I thought from time to time through the years to whether to put that in the site, and maybe one day we will. Yeah, I'm looking at that site just for your listeners here, so I don't feel like I'm rambling here, but if they went to mystockoptions.com, and then it's got a / Black-Scholes. Yeah, so that's gonna get you there. That's gonna get you there. Or do a Google search on that, mystockoptions.com, Black-Scholes. And it's just a basic little calculator that comes up here, plug in stock price, exercise price, time to maturity, and hit the calculate button, and spits out the current valuation. It kind of gives you in real time, at least mathematically, what it is. But that's good only at that one instant. So that's the deal. So the next day that may change. If the common stock goes up a little bit in value, the warrant goes up or down. I mean, it's all subject to a daily change. So I'm more trying to round it off just a little bit, step back, and not deal with this on a daily basis. But it's like in the grand scheme of things, is the warrant fair value today or undervalued? And I think that works well. But on rare occasions, when a warrant is first coming to market, and we get notice that it is coming to market, and I'm curious, what would the warrant probably start trading for? I immediately do the Black-Scholes calculation, knowing then that warrant's going to start trading for approximately X amount. And that's kind of what I'm looking for.
Excellent. Are there any other thoughts you'd like to share with us before we wrap up, Dudley?
Well, I'm just one that I don't know, maybe I always appear to be too over-optimistic, too bullish, whatever. I think most of us in the business are. We try to be realistic. I think we all love what we do. We're in a sector that's incredibly volatile. There's an incredible amount of money to be made in our sector when you're in here at the right time. And I believe that right time is coming right down the road. I believe that the timing has to be good here. Maybe this is the last big pullback we're going to have here. We know that we may still have some uncertain times here right in front of us, but I think opportunities are being made right here today. And so that's what I hopefully I'm trying to prepare my subscribers for, and your listeners as well here. And so I hope, we're all really, really optimistic, and I feel like we are in the right place at the right time.
Hopefully we can see exactly that come to fruition here soon.
You bet.
If anybody has any questions or comments on today's show or any of the shows we have, can you please email me at tom@palisaderadio.com. Dudley, thanks for your time today.
You bet. Thank you, Tom.
think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip-your-face-off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?